Well, for more on the outlook of China's financial sector, let's bring in Dan McClory. Dan is Managing Director and Head of China for Boustead Securities. Welcome back to the show.
Thanks, Rachelle.
So we wanted more meat on the bones, and now we have a timeline laid out by China's central bank governor, Yi Gang. What's your take on the pace of China further opening up its financial sector?
I've got to say, Rachelle, that my immediate reaction to what's happened in the last 48 hours is it's been extremely consequential. But if this is a trade war, I think both sides have won. I think there are some immediate and measurable benefits now to not just U.S., but foreign companies entering China because of the quantification, the percentages, the timeline that's been laid out. But also now it's sort of like Mr. Xi has done a return serve in tennis to Mr. Trump. And now it's time for Mr. Trump to respond. But he's given Mr. Trump some sound bites to go back to the American people and say, look, things are improving. So I think it's very important, even though a lot of observers would say some of these reforms were discussed back in October and November. But when you start putting dates and percentages, and you talk about phasing out the requirement for any form of local ownership in things like banks and financial institutions, I think that's tremendous progress.
Now let's break down some of these sectors. We saw that foreign investors are being encouraged to enter China's trust, financial leasing, auto finance, money brokerage, and consumer finance sectors this year. So which sectors do you think offer the most exciting opportunities for foreign investors?
There's probably three. And these would be sectors, Rachelle, where China is really in its early days of developing the market. And the ones that come to mind are, number one, automotive finance. This is something, with the dawn of now China becoming the largest automotive sales market in the world, the auto finance system is catching up with it. This is something that the rest of the westernized world has been dealing with for generations and decades upon decades. So I think auto finance, not just in terms of bringing sheer capital, but expertise about how to implement and structure that type of an operation, perhaps through foreign banks. The second one that comes to mind is in the consumer sector, which there are all manner in China of peer-to-peer and micro-lending and other forms of finance. But again, remember, the Western world has been doing consumer finance for quite some time, and I think there's some very good expertise to be delivered. And the third area I'd mention is in equipment leasing. Equipment leasing is a relatively new concept in China, perhaps been around for about a decade at the most, but it hasn't really trickled down into commercial and retail banks, and it really hasn't gotten beyond some specialist finance companies. So I think those are three very tangible and immediate areas where Western expertise, and especially from the U.S., can bring in capital and serve a large and growing market in China.
Now let's touch on something that always seems to come up in terms of equal treatment of domestic and foreign companies. And we saw the central bank governor really stress this equal treatment. How much do you think that clarity will impact the confidence that people have in the Chinese market?
Well, it starts with statements and dialogue and words. And many Western observers would criticize China and say that's sometimes where it ends. But what we've seen in the last 24 hours is it hasn't ended there, and we now have deadlines and percentages, and we have amounts that are on record and that will have to be lived up to. So I think it means a lot, but I also think that the words, as we always say, have to translate into action. But the time frame between words and action here is relatively short. So I think the world will have an ability to assess China and its implementation of what's been communicated in the last couple of days. And I think the outlook is pretty positive.
Now, we know that as of May 1st, China is going to boost its daily quotas for the Shenzhen, Hong Kong, and the Shanghai, Hong Kong Stock Connect mechanisms. And now these, for people who don't know, allow international and mainland Chinese investors to trade securities in each other's markets via their home exchanges. So what are the main benefits of boosting these daily quotas?
Well, first of all, let's talk about the increases because they're bi-directional, as you point out. So you've got the southbound, which is money coming out of China to invest in Hong Kong. That's about $7 billion US. Again, you've pegged it right. It's been increased 4 times. Then you've got the northbound traffic, which is money coming into China, which has been increased to about $8 billion. Again, that's about a 4x increase. So in absolute terms, those are large numbers. It remains to be seen if those are going to be maxed out and met, or if only a fraction of that capacity is going to be used. And what we've seen in the past is there have been peaks and there's been lulls, like in any arrangement. So I think the world is watching to see if the increase in the amount will actually increase the flow. But there was a very interesting message about another Stock Connect that came out, Rachelle, and this has to do with discussions underway with the London Stock Exchange. And they're talking about creating a Shanghai-London Connect, which would be phenomenal because that really opens it up to the Western world and Europe, in addition to Asia, which is what the movement into Hong Kong does. So I think these are solid developments.
Right.
I like the London angle, and let's see how much flow actually comes through these increased allotments.
And Dan, just quickly, we saw that the central bank also highlighted the importance of balancing risks in the financial sector, as well as ensuring regulation. What are the challenges that come with the further opening up of China's financial sector?
Well, you've touched on it. You know, it's sort of how do we get quality growth and still increase the quantity? And how do we not sacrifice regulatory and compliance concerns? And again, this is where foreign firms who will be coming into China are going to have to bring best practices and methodologies and assimilate, of course, to the local systems and protocols. But it's clear from Mr. Xi and what he has put out there that he doesn't want growth at any cost. He wants quality growth, he wants rational growth, he wants a control of risks. So perhaps what we're seeing here, back to my earlier point, is some of these newer and more evolving forms of finance are being opened up, in addition to others, to Western investors and financial institutions, bringing their own capital. And they're going to perhaps have a better shot at serving those markets because they've been at it just a little bit longer.
All right, thank you so much as always. Dan McClory, Managing Director and Head of China for Boustead Securities.